start with just a brief intro and then go straight into it. We're hoping that this session will be about 1 hour and we'll try and keep to it. So things will be nice and brief because we do want to give also time for the audience to ask any questions, share some comments if possible, and hopefully everyone will get out of this webinar some good value, some good content and learn about you guys. So without any further ado, I'm going to start, and as people join, they can, hopefully pick up on where we are. So great to have you all with us today. Thank you for taking the time to join us. I, Hanah, work at Lendai. I manage the UK and European markets, and I help with all the, lending needs of our foreign investors in those markets. So we have dedicated teams across the world that help foreign national investors, as probably all of you have learned about us and know. But my market really is UK, Europe. We have a Canadian team. We work with Australians. We work with Singapore investors and Israeli investors, and very soon to be, we've just launched Brazil. So hopefully growing our Latin American markets as well. And the purpose of this webinar today is really to talk about why invest in the US. Why do we even have the need to be here today as Lendai? Why are we a foreign national? What is the need? Where is it coming from? And hopefully learn a little bit more from our esteemed hosts, Gregg, Cohen, and Steve Bell. And without any further ado, I'm going to pass it on to you guys firstly to start with a brief intro before we get straight into it and talk about some exciting stuff. So Steve, if you wouldn't mind, just a brief intro about yourself, your team, and then we can pass it on to Gregg.
Sure. Thank you so much, Hanah. Thank you for the invitation from you and Lendai to be a part of this. So, my name is Steve Bell, and I'm a partner with Harding Bell International. We are a full-service CPA accounting firm, based here in the Central Florida area, but we work with anyone all over the U.S. Our firm has specialized in working with non-U.S. resident investors for over 20 years. And so we have extensive experience, my team, from top to bottom, working with investors, whether it be short-term rental, long-term rental, commercial endeavors as well. So that's basically why we're kind of in this space. So happy to be here.
Thank you so much. And yes, we know that our clients, really have a need for your services. And the fact that you specialize in foreign nationals is going to be really crucial for and why we're really here today. Gregg, I would love to just, if you wouldn't mind introducing yourself and your awesome team as well.
Of course. So my name is Gregg Cohen, and I've been investing in real estate here in Jacksonville, Florida since 2006. And I absolutely fell in love with this asset class once I learned the fundamentals of how this asset class performs, both in good times and in tough economic times. And since beginning in 2006, I started to purchase rental properties, acquired about 40 of them before the Great Recession, learned how well they could actually perform even during a recession, and have held on to them and have continued to build my own portfolio. I own over 300 rental properties now. And we built this entire company, JWB Real Estate Capital, to help investors, many foreign national investors, invest in rental properties, single-family rental properties. And so I'm super excited to be here today because I think this is a time where we need to shine a light on this asset class, how it can perform, because tough economic times are probably in front of us. And this is a time where you really can thrive if you understand the assets that perform well.
Excellent. Fantastic. Thank you guys both for that. And really, really important towards the end of the webinar, we're going to have everyone's contact details. So please, if you're inspired by anything either member mentions, you'll have the ability to reach out to them. So without any further ado, I wanted to firstly start by throwing some statistics so that we can prove that there's a need for this conversation. Up to the year leading March 2022, so just recently passed, the amount of foreign international or the international buyers buying US residential property reached $59 billion. Now that brings an average property price of around $600,000. And the leading countries where the investors come from to make up that 59 billion has been China, Canada, India, Mexico, and Brazil. The top destination for that 59 billion has been Florida, which is why it's excellent that all three of us are based here in this great state, and why I'm excited, Greg, that you and your team are really active in this market and helping us today with this conversation. So clearly there is a huge market here. Clearly there's a lot of players involved, because don't forget, there's not just the investors, right? There's everything surrounding this sector and surrounding this market. It's a huge industry. And very interestingly, when we look at the figures of the investors who are actually buying in the US, the foreign national segment are twice as likely to actually buy all cash. Now, what that means is that they, of course, are essentially limiting their capacity and their ability to expand their portfolio and potentially buy better value properties, larger portfolios, build their retirement plans, and work effectively in that segment, which is why Lendai really came about. We are hoping today and in every as time goes by, to increase our share of working with investors who need financing for the US investment properties. And the fact that they are foreign nationals should never be a limitation. So we've established that there's a market, we've established that there's clearly interest. I'd love to pass it on to each of you to really hear from your perspective, because Steve, you are involved in the more logistics side, the operational side, in terms of the accounting and the tax. So you've come across this segment, and you can probably gauge and learn from them why they're even attracted to the US. And same for you, Greg. You are actively out there in the market. You're physically, the one showing the properties, managing the properties, creating industries. So I'd love to pass it on to each of you, just to give me some insights of what your experience has been with the foreign nationals. Where do they see the attraction and the benefit? So Steve, if you wouldn't mind kicking us off, and then we can talk about Greg.
Sure. Thank you. I think one reason why people like to invest here in the U.S. and specifically Florida is that really the U.S. traditionally is the safest place to invest. We have had stable government, stable conditions. Obviously, we have ups and downs in our markets, but generally speaking, people around the world look at the U.S. as a safe investment. They have turmoil in their home countries, and also, if they have a stable environment where their home country is. The U.S. is also a great place to visit, and it's a great place to vacation, specifically the Central Florida area. Here we have Disney. I think also continued growth. We are always, and specifically Florida, we are a bit recession proof because we have Disney, we have beaches, as Greg would tell you where he's at, is that there's a draw that really never goes away. So it's just a great place. In my opinion, that's some of the reasons why it's great to invest here.
Fantastic. Greg, what insights can you share?
Well, I think Steve hit the nail on the head there. But I think in addition to that, it's a tough time to be an investor.
Yeah.
It's a tough time to be an investor in the United States. It's a tough time to be a foreign national when you're thinking about where to put your money. Because what we know is that while we are not in a recession yet, a recession is likely. And if you think about where you are going to put your money as a recession comes, there's a negative correlation between stock market performance and recessions. Stocks, companies typically do worse, and their stock performance typically goes down. In recessionary times, bonds usually produce lower returns, as well as central banks tend to lower interest rates. So stocks and bonds typically don't work in recessionary times. But as Steve was talking about, U.S. real estate has proven to be incredibly stable. It is a safe haven. And so the numbers that you were talking about, Hanah, clearly show that there's normal interest for foreign nationals to put their money in U.S. real estate, but especially now, folks are searching for a stable asset class, and that's why folks are looking to real estate here in the United States, and specifically Florida.
Absolutely. I mean, you guys really, your answers really, I can corroborate from the experience that I have speaking directly with the investors. I mean, a couple of things that I've heard repeatedly as well is the yield. The return on the investment here in the US is not comparable to most markets anywhere else, regardless of the stability, regardless of other opportunities. The sheer size of the country, the sheer range of different options available, different types of properties, different states, different cities, and the industry that goes along with that is not, you cannot compare. Another thing a lot of investors mention, they say, I'm buying this property now, I'm going to rent it out, but who knows, one day I might want to move to sunny Florida from my freezing cold, Norway or wherever it is I'm living. Or, they want to have an opportunity for their children to go to university and have a place to live, or have some kind of asset class to back them up with their later on in the years. So there's really a range of reasons why people are buying in the US as investors, regardless of the desire to have a second home or a vacation home. And yes, this is why we're all here to serve this market segment. And I wanted to talk about, we're talking about how great it is to invest in the US and all the reasons for it. And as I mentioned, the statistics clearly, there's no shortage of investors. But what I'd like to ask you, Stephen, and you, Greg, is let's talk about the process itself. So the hurdles that potentially come along with foreign nationals investing in the US, because of course, we are across, an ocean for the most part, unless you're investing from Canada or Mexico, but still, there is a distance. There are huge differences. You've got the currency difference, you've got the banking system difference, legal difference, so many different hurdles that could potentially derail or prevent investors from the desire to invest here. Yet, you've come across these and hopefully you've managed to steer your clients through that. And I wanted to hear from both of you really to talk about the two different perspectives, both in terms of the real estate itself, buying it, and then of course managing it and structuring it. What do you encounter firstly as the process? What does that involve, but also what the hurdles might be in your experience and in your world. So Greg, I would love to start with you really, because from the start of the transaction, right? You've got someone based, let's take an example, someone based in Denmark looking to invest in us. What is the process and what should they consider?
Absolutely. You really want to work with somebody who is seasoned and understands what it is like to work with a foreign national. I know it can be kind of scary to do this overseas. And so you never want to go with somebody who has not worked with somebody that's in your situation before. One common mistake that I think many investors make, and these are US investors, foreign national investors, is they tend to get it wrong as far as the priority when it comes to making the decision. Most investors start with the property and they spend their time analyzing the property, and they spend a lot of time there. And after that point, they may go and do a little bit of research on the market. And then lastly, they focus on the management team. But I think that it need to flip that on its head. Most successful investors who've owned rental properties for a significant period of time will tell you that it needs to be the opposite. You need to focus on your team first, because while anybody can put together a fancy pro forma or property evaluation, the team is actually what turns those numbers into actual profits for you, and more importantly, makes it an enjoyable experience for you. And for you being an ocean away, the experience is paramount. So you want to work with a team. We have over 1,500 clients, and we've been able to serve clients who live in 13 different countries. And wow. So that's really important to be able to go through that experience. The great thing is that it's not so tricky when you know how to do it. Through the legal system, through wonderful financing partners like Lendai, through incredible accounting partners that we have within this network that we have, just like Steve, we're able to make this process, which can seem very scary on the outside, become something that is more similar to the transaction of buying a stock or buying a bond. It can become a passive process, and you can have a team to manage everything for you.
And can I ask, Greg, can you talk about that? You talk about it being like a stock. That's a great analogy, because really what we're after is the passive income. Every investor, it's their dream to be able to just, give the paycheck, get the keys, and collect the check each month. How does that manifest at JWB and like companies like you? What are the, what is the solution that you give, technically speaking?
The solution is a term called vertical integration.
Okay.
Vertical integration is the key here. A vertically integrated company has all aspects of the investment under one roof. And that is the number one key that you should look for when you're thinking about investing in a company, especially if you are, investing in a rental property, especially if you are overseas. So think about the different types of teammates that are required to bring one of these transactions together.
Yeah.
Acquisitions, financing, construction or renovation of the property, property management for sure, accounting, title work, the legal process, all of those can be under one roof. And when you do that, the process could be as simple as you reaching out to, let's say that you wanted to work with JWB. We have a few introductory conversations to understand what your goals and your resources are. And there we're able to offer investments for you within a couple of phone calls where you can pick and choose which investments you'd like to add to your portfolio. You can be under contract and closing within a week to 2 weeks. It's very normal for JWB clients. And so it really lends itself well to those foreign national investors who don't have the luxury to come over to the United States and spend a lot of time organizing those teammates. And I think the most important thing is when you invest with a vertically integrated company, there's no finger pointing. There's no room to play the blame game. Whereas in typical real estate, you have so many different people who are incentivized different ways and make money different ways that if something doesn't work, the real estate agent could say, oh, the property management team didn't do their job. Or the property manager could say, oh, the construction team didn't do their job. You solve that problem through vertical integration.
Interesting. Can you talk us through a typical, for example, transaction, maybe even like give us some insights into what it could look like? For example, a property, like price points, what timeline, what they should expect in terms of the actual deal, what it would look like, just to put some numbers on the.
Absolutely. Would you like me to show you?
I would love that, actually.
All right. Well, then let me work on my technical skills here.
Absolutely. We're all behind you. Not to worry. And Greg, sorry, there we go.
All right. I will bring up our slides here. And away we go here.
Fantastic.
So I think it's also, sometimes people get confused and make this a more complex process than it has to be. And the vertical integrated process is actually quite simple. You would be investing in single family rental properties. Our market happens to be Jacksonville, Florida. That's the market we're focused on. It's just simple, direct ownership for you as the client. You own the property 100%. This is not a fund or a syndication or a REIT. This is just a vertically integrated approach where JWB has taken all of these aspects of the investment and brought it under one roof to make this a better experience and better returns for you overall. Residents have zero contact with you as a JWB client. Our team handles everything, which is of course important, and you have full control of the asset. There's no lockup periods or extended contractual agreements. And through this vertically integrated process, we've been able to document, not only do we produce a better experience for clients, but because we are so focused on one market, we've been able to see outsized growth. So JWB clients have earned 79% more home price appreciation than the average Jacksonville investor since 2013, which is because we are in this.
Incredible.
Yeah.
Is that really because as well, like, let's not forget, you're not just finding the property, but you're also then responsible for the property, right? If you're putting the tenant in there, you're then responsible to deal with them. And it's essentially in your interest to maintain the property, and the condition it should be up to par, and the relationship and the type of tenant. Is that also part of your I guess, thesis and logic?
100%. We are 100% in this market, and we have the incentive to perform for you long term, because I think it's important to always follow the money when you're thinking about investing with someone. And if you follow the money here in a vertically integrated company like JWB, we make the majority of our money through home sales. And so if we're able to work with you as a client, you establish a plan to acquire a number of properties, you buy, let's say, your first few properties with us. Well, if we perform on the management side, if we have a really wonderful relationship with the resident and they want to stay in your home and continue to pay you rent for many, many years, well, then there's an incentive for us to perform that way so that you come back and you buy more properties with us. And so that's a very big part of why this works, because goals are aligned.
Of course, and also let's not forget who we're talking with is foreign national investors who are not here. The fact that the property price raises in value that much is excellent, but of course they're not here to maintain the property. They're not necessarily here to visit the property. So having this kind of solution, or having good property managed, be it JWB or any other market, that they have this all-encompassing interest where your interests are aligned, is hugely important, because this is one of the ways to really eliminate a lot of the challenges that come with being an investor to start with, but also a remote investor, right, from abroad. So that's really great. And thank you so much, Gregg, for that. Let's look at an example.
Yeah, I thought I would just share with you, just to make this a little bit more real or tangible, what it would actually look like. This is a property that a client recently purchased here in Jacksonville, Florida. And these types of assets are the only assets that we focus on. The same market, the same neighborhoods, similar price points. On this one, the purchase price is a $225,000 purchase price. You could expect purchase prices being between about $180,000 to $280,000. So depending on where you are in the world, I would imagine that seems very low to most of you. Returns on investment you can expect, especially working with our wonderful partner over there at Lendai. This is assuming you'd be getting a Lendai loan. You can expect IRRs, or internal rate of return, around 9% on this asset. And so if you can perform consistently, have stability in an asset class, and earn 9%, that's something that's surely attractive for many investors out there. As you can see here, it's a brand new construction home. The vast majority of our inventory is brand new construction, because what JWB does is we actually buy the land many years in advance. We build new construction homes on the land. We then put a resident in the home. Some people call them tenants. We call them residents because they stay a long time. Our average duration of resident stay is over 4.5 years. And we sign 2- and 3-year leases to make sure that our residents stay a long time, because the longer they stay, the better your returns are. So you can see here, 3 bedrooms, 2 baths, about 1,200 square feet is very normal for the type of home that you'd be investing in. And Jacksonville's average appreciation rate is higher than the norm here in the United States. So 4.6% annualized appreciation year over year is what you get over the long haul. And then lastly here, we've been able to document that 100% of our clients are beating their original return on investment expectations. We're really proud of this because we want people to remember what they were expecting when they signed up to purchase this property. We share that with them. We don't let them forget the return on investment expectation, and then we're able to show up month on month in our reporting and deliver on that.
Fantastic. Thank you very much, Gregg, for putting that to life, and just for giving investors who maybe even not sure what market to invest in, just to get them a flavor for what Jacksonville has to offer, and certainly what JWB has to offer, and also for just to as a comparison, perhaps they're considering another market, just to give them a bit of due diligence and just to confirm their biases or their whatever it is they're considering in other markets. And Steve, I'd like to take this opportunity and also ask you from your perspective very differently, but we're talking with foreign investors who are entering a new market. They may be their first time, it may be their second, third transaction, but what is it that you notice in terms of the conversations that you're having with your investors, with your clients, sorry, what does the process look like? Like, at what point should they consider their structure? Or, to own the property outright, to own it in an entity, and what are the typical hurdles that a foreign national investor would face that they should consider as part of their conversation with you or their outreach with an accounting or tax firm. Can you give us a bit of insight in that world, what to consider?
Yes, absolutely. Yeah, before I kind of start on that, one of the things that Greg said really struck home to me is that you want them to have a good experience. That's been our motto and our passion for years, and that we want to work with, and we try and work with teams and groups here in the Orlando area, that Central Florida area, so we want our clients to have a good investment. We want them to be happy. Because what happens then, if they're doing well, they're referring their friends and their family members to us as well. So it's important for us that they have a good experience, and we try and work with the best. We make sure we don't partner with people that they don't have any scruples. They have, we try and work with the best. So but yeah, there's definitely some things to consider regarding when you're purchasing. Honestly, we really need to, at the beginning of the process, you really need to speak to an accountant to really decide where you're going with that. If I could kind of share my slide, a little bit of slide, what I've got, and explain a little bit about that, if that's fine, so we can go through that.
Yeah, it's really good to have an example of a type of client or information that can be valuable to a team to consider. Thank you, Steve.
Sure. Let me see if I can get this moving. But I don't know if I can. Let me stop this share for a second. I apologize. Let me go back into that if I can. And
no problem. Or you can skip directly to the slide that you want to present, maybe.
Yeah. Okay. So basically, if you can, are you able to see this, or is that not open?
No, you want to try and share your screen, or
okay, let me do that again. Apologize. So
no, don't worry.
All right. Okay. So kind of first things you want to talk about is, what are the best ways to own property? And honestly, there's several options for ownership, individually, as an LLC, a corporation, partnership, trust, non-U.S. corporation, for example, foreign corporation. Now, one of the things that really are tacked when we talk to a client or a prospect is that we want to talk to them about, what are your concerns? What are your goals as an investor or a vacation homeowner? Are you concerned about tax? Are you concerned about your liability? Are you concerned about inheritance? Also, what comes into play as well, the type of structure is the country of origin. Are you looking to immigrate here? So all those things kind of come into play. So these are some, and we're not going to delve into the specifics of each of these today, but these are some of the forms of, ownership of ways you can own property. Now, once they have an investment property or a vacation home, what are the tax requirements as a short-term owner or a long-term vacation owner? They have the requirements they have are annual income tax, annual tangible tax, monthly sales and tourist tax. That's in a short-term rental. There's a Bureau of Economic Analysis filing every year, and applications will need tax ID numbers whether they're a corporation or they're owning it individually or both. Now, I apologize, tax can be boring. It's not as exciting as the stuff that Gregg's talked about, but it's definitely a necessary. And one of the things that that we hear from most people, they're worried about the U.S. tax system. It's not really as scary as it may be played. There's a lot of misinformation out there. I hear a lot of misinformation coming from, honestly, from Canadian clients. I mean, more so than some other countries. But what we try and do is really speak to them, tell them, here's what you're going to owe. This is what you're going to end up paying. And honestly, what most people have to pay at the end of the day really is property tax. And in some cases, they're not owing any income tax just because of all the deductions. And I like to kind of show you a couple examples. These are real world examples of clients. Now, both of these are in a profit position. So just kind of give the viewers an idea of what they might be looking at. This one is an actual client. This is a Schedule E that has their income. This is a short-term rental property of one of our clients. Now, this is probably a larger home, and they had $60,000 in rent received the last year in 2022, and with all the expenses and so forth they ended up with a $7,800 was their gain on that. And this is because it's a short-term rental. Now they have a lot of cleaning and maintenance costs. There could have been a renovation there. There could have, I believe in this case, there probably was some renovation stuff going on. I don't have specifics on that, but generally speaking, so they've actually made a profit of $7,800 for the year. And on the next one, this is a long-term rental. And even though the rent is lower, it's $36,000 a year, their profit was higher, $12,937, because there's less expensive in a long-term rental, which I think Gregg probably handles mostly that. And he would know that there's definitely a lot more profit and a lot more stability in the long-term market. Now, I would tell you that from going back to the short term, is that a majority, if you're looking to have a vacation home or that you want to come and spend time in, and bring your family, friends, and you're going to rent it out to pay some expenses throughout the year, in most cases you're not going to be paying any income tax, because there's enough expenses to offset the income. We represent roughly 3,500 non-resident, non-U.S. resident clients, and I would say that 95% of them never pay any U.S. income tax as part of that. So, and last slide, just kind of show you, these are some things that can be expensed in, especially in the short-term rental. This is a screenshot of our actual spreadsheet. Just showed you some expenses, and there's quite a few, especially on the short-term rental, where that can be deducted against income. So so what happens is you spend your money, you have this nice vacation home, and you're not really paying any U.S. income tax. Yes, you have property tax, but generally speaking, that's the only tax you're going to pay in the U.S.
Yeah, this is incredible. I mean, thank you so much for bringing those real life examples, because it really puts some meat on the bone and everything that we're talking about. And just to go back to the start of the conversation, we were talking about why even invest? Why are they looking to invest in the US? Some investors say that for the tax benefits. You cannot have these deductions in other markets. I can tell you from my experience in the UK, it's just not the same. And coming from a lender's perspective, when we often have these conversations about the interest rates, the rising interest rates and the impact on the loan, and clients not wanting to refi because the interest rates are really high. Well, two very good examples, or two very good reasons why this should be something to think twice about and to think in a positive way, is that you've got this additional tax deduction. So for example, you've owned this property for a while, you have no renovation costs. Perhaps it's a long-term rental, Gregg, like one of yours, and you don't have those high cleaning fees, and you need to have something to deduct. You want to be able to leverage your asset that you own outright. You've got no interest burden. Well, there you go. There's another way for you to expand your portfolio plus reduce your tax bill. There's two, it's a really good benefit, as well as, of course, the diversification that you have from your growing portfolio. And yes, so those two things have really made it a lot clearer for us. And of course, every client's situation and scenario will be different, and they'll have those conversations with their dedicated accounting and tax representative. I would like to touch upon something you mentioned, the Canadians. Now, I know it's not my market, but we just had a really great webinar with my wonderful colleague in Canada, and they discussed just that, the different things that often they hear that are probably not really, in some ways mistaken, that they have different structures and certain ways that the structure isn't necessarily as effective. And you really need to bear in mind that in each market, there are certain nuances that you must discuss with your dedicated tax advisor, so that you're getting the best out of your investment, both in terms of the income, but also to protect yourselves in the best way possible. Your liabilities should be protected, and the structure should be, the most effective way. Because again, if any of anyone in the audience who will speak with us about their specific investment property that they would like us to finance, we will tell them the same thing. We'll tell them, we look at your investment as a business. And your business needs to be, of course, structured in the best way and be protected in the best way. So from our perspective, we always recommend, and we insist, in fact, on it being owned by a US entity. And that's where you come in, Steve, because you can help with that. But of course, each person has their own scenario and their own considerations, and will structure it in the best way that's suitable to them. But that conversation has to happen regardless. At least if you make a decision, you're making an informative one, and you've spoken with a professional who has guided you and has looked at your unique circumstances and will give you the best advice possible. Now, Gregg, we talked about long-term rental. I just noticed a question that came up, and I wanted to bring up because Steve talked about long-term rentals, short-term rentals. In your market, do you find that there's any advantage in being in the long-term rental versus the short-term rental? Do you deal with that at all? What would your input be on that front?
Yeah, short-term rentals have really been a hot topic, especially for the last couple of years. And, our focus for our business is long-term rentals. And we've sold over 3,000 properties, and all of them have been long-term rentals. And that's clearly a way to win in U.S. real estate. Now, at the same time, I'm interested in short-term rentals as well. And so our company, we own about 40 short-term rentals here in Jacksonville. And it's not an approach that we are taking so that we can sell this to clients at this point. We're just simply putting our own money into it and exploring, which I think is a prudent step. I think there are some upsides for short-term rentals, but, short-term rentals really haven't been through a recession yet. And so I'm interested to see how my assets perform in short-term rentals. I think a lot of people are. And I think it's just a different type of skin in the cat. As far as U.S. real estate, and like Steve mentioned, there are different priorities that you probably have if you're going into short-term rentals than long-term rentals. And that's not to say one is always better than the other, but just recognize that they're a little bit different.
Yeah. Okay.
If I could interject too,
sure.
I don't know if I can interject on that note too. Well, I think we've seen a shift, at least in the Orlando, Central Florida area over the years. Initially, a lot of the short-term rentals were in the 3 or 4 bedroom range, and they were not really able to generate enough income to really offset enough costs to really make it a great investment. At least not from a year-to-year basis. Obviously, as an appreciation when they go to sell, yeah, they're making some good money. But what we've seen is a shift to larger homes. And I think, like the example I showed you in the short term, there's a shift to 5, 6, 7, 8, 9, 10 bedroom homes. And some of those investors, they're making massive amounts of money. Some are their income is over $200,000 a year on a short-term rental. So, but obviously it's different. And of course, Gregg, you mentioned the recession. Definitely the pandemic hit short-term rentals hard for a while, until, of course, Florida opened up again. But definitely we see a lot of people leave that business during that time. So.
Excellent. Thank you guys for your input. I wanted to bring up because you touched upon it, and I see quite a few questions about that. I mean, there was a question about, can you know ahead of time, whether your asset's going to yield better as a long-term rental or as a short-term rental? And I don't know, I'm curious, Gregg, what your advice would be to someone asking such a question, but would be it in your market or any other market?
Yeah. We know how long-term rentals are going to perform, which is really wonderful. From net income perspective, we understand what rent rates are. We understand what expenses come along. And if you've been working with a provider, they should be able to give you really great expectations. We also know how markets perform over cycles. And so if you are a buy and hold investor on the long-term side, it's kind of like you have the answers to the test. If you know how your market has appreciated over the last cycle, over the last 10, 20 years, good chance you're going to see that average appreciation rate over the next cycle. So we sort of know that. It's hard to know on the short-term rental side. I would echo what Steve was mentioning as far as the variability of the short-term rentals. For our rentals here, we haven't seen a tremendous amount more of net income after the expenses are taken into account. We see a lot more gross income, but we also have more expenses. And so for us, again, this is just a a test run for us for the 40 properties that we have. And it's too early to determine for us if this is going to result in higher returns. But I think one thing we're pretty sure about is that there is going to be more variability there. And so it should be a higher return threshold for me if I'm going to deal with more variability.
Amazing. Yeah, thank you for that. I mean, just to do a little bit of self-promotion, I hope you'll permit me. We just launched a short-term rental product. And so this is really, relevant for us to, of course, discuss. There's been a lot of buzz around it. We've been planning it for a while. Of course, we're in Florida, so this is like the bread and butter. I've personally, Steve, I don't know if I told you when I saw you a couple of weeks ago, but I went to visit these houses you were mentioning, those large houses in Orlando area, which are all phenomenal, with the theme rooms, with the Disney themes, and it's a really, really amazing experience. And a lot of investors are doing really well. And perhaps they themselves have, they, as children or as younger adults, they were attending Disney, going to these houses. So they have this, sort of certain bias that they would like to own such a property. But a lot of them are doing really well and have huge potential, both in property growth, value, and the income, especially over time. And so we've created such a product to finance these properties. But what I could potentially suggest to those in the audience that are considering or thinking between the long-term rental and the short-term rentals, as you said, Greg, to think, what is your long-term strategy? What is your preference as an investor? And to add to that, us as a lender, something that could potentially mitigate, because we discussed how the expenses are really high on these properties, but if you're looking at a brand new property that's for the first time going to be used as a short-term rental, perhaps it makes sense. And one thing that we do is we start by underwriting it as a long-term rental. And why is that? Because the long-term rents are expected to be a lot lower than what a short-term rental is potentially able to yield. What that would mean is that your essentially the equity that you would hold in the property will be much higher and will finance a lower amount of the property, which will in turn yield a lower mortgage payment each month so that your expenses will be a bit lower. Once you've had that traction, perhaps you've owned the property for a year, you've had some seasoning, you've got, a ledger that you can potentially rely on and have a better understanding of what the property actually yields, and you'd like to refi and get a larger mortgage on that same property, then we can have that conversation a year down the line. But to help you mitigate as an investor starting this, we can underwrite it as a long-term rental, give you that, some stability, a lower monthly expense so that you can actually build that traction with your property, work with your property manager, be more involved, and then know after a year, where do you stand and does it make sense to expose yourself to a bit higher volume. So that's quite a nice conversations about short-term rentals, and thank you for allowing me to promote our new product, which I'm really excited about. Now, I'd like to shift gears a little bit and talk first-time investors. There are certain things that I would like to know. For example, you get a call from a first-time investor. What is a typical conversation with a team member of yours? What is it that they should come prepared with? Just so that the audience that are here that might, want to get in touch with you guys or in any other market that they're looking to operate, what would you give? What would be your advice how to prepare them for that? So, Greg, if you want to start.
Absolutely. I really love that question. When clients come to us, the first questions that we ask are about their goals and what does success look like to them. And, if a client is looking to build consistent, repeatable income over time, if they understand that this is not a get-rich-quick scheme, that this is a hopefully get rich over a very long period of time, that's usually a better fit for how we can serve that client. The other thing that we spend a lot of time talking about is the difference between being an active investor and a passive investor. And although foreign nationals, clearly you're not going to be here in Jacksonville to swing a hammer or things like that, but the ideal client fit that has really worked well is an investor, a foreign national, who wants to do their due diligence on the team that they're working with, and then they want to let them operate, right? When it comes to things like resident selection, It's important that you feel confident that your vertically integrated provider like JWB is probably better than you at selecting the resident and doing the background checks and making sure that we're verifying income. And, so it's important that you be comfortable in that type of a passive nature to the investment. Clearly, you have all the decision-making ability, but a lot of the day-to-day, there's thousands of decisions that are going to be made on your behalf. And so it's important to have that. And that's a lot of our initial conversation, is making sure that that's the type of working relationship that a potential client is looking for. Once we can kind of establish if that's the success that you're looking for, then we can go into a little bit more of kind of property specific or property management specific related questions, which there's always a lot of those. And so we spend a few conversations, a few hours typically talking through before we will actually get to the point of selecting properties. And I think that slow approach is better for everybody.
And to talk about, while I have you, Gregg, on this conversation, what would be your suggested time frame for investors to bear in mind from having that first conversation? What can you expect in terms of, you have someone who's really, really keen and wants to get going? What would your advice be to them? What would your process look like in that regard?
Yes, absolutely. If anybody is interested, they should certainly start to reach out, and we would have that initial conversation. Typically within 3 or maybe 4 conversations, clients are at that point where they're selecting and putting properties under contract. So I think that that's usually a 2 or 3 week process. Now, at the same time, the assets are already owned by JWB. So it's not like we have to go out and find the houses for you. We already own them. They're already built. They already have residents in them that are paying rent. But we take that 2 or 3 week approach to make sure that this is going to be a success for the long haul. And then from that point, once you put properties under contract, we work with our network, with Lendai, with Steve, with all the folks that can come together to make this happen and get you to the closing table. Of course, the closings are remote. And so depending on the financing terms, or if it's a cash closing, you could be closed in as little as maybe 2 weeks, or maybe a little bit longer if it takes a little bit longer than that for financing. And at that point, JWB is your asset manager and your property manager. And then we continue to work with you, hold your hand throughout the process. Eventually that turns into more of a monthly call for you with reporting, where we sit down, we analyze the performance of your assets and help you take advantage of new opportunities, maybe adding more properties to your portfolio, or preparing you for things that may happen. For example, a resident may be moving out, or a maintenance expense, which may be coming down the pike. But that constant communication is really, really important.
Thanks, Gregg. Steve, do you have any thoughts as well in terms of that first conversation, and what should an investor come prepared with, or what to expect from that initial call?
Yeah, absolutely. Yeah, and really, it just kind of piggybacking on what Gregg said. We're our first thing is just really asking them questions. What are your goals? As an investor, is this just a second home, a vacation home? Are you looking to become an investor, major investor? Are you what's important to you? I think I mentioned before, is immigration something you're considering down the line? So, and then of course we'll ask the questions, what are your, I think I mentioned before, what are your concerns? Is it, tax? Is it liability? Is it, inheritance? And then that gives us a better idea of what structure they need to be in. Because we don't take a cookie cutter approach here. There's a lot of CPAs, accountants that say I think it's honestly it's a bit laziness, or they don't know. But they want to say, hey, this is the way you have to invest, and nobody can know the best way for you. What's at the end of the day, it's got to work for you, what's best for you. So that's what we just ask those questions, really, to find out what their goals are, what are they looking for. And I know a lot of times when an investor, the first thing they do, or a potential investor, they're going to speak to a real estate agent. And many times the agent doesn't want them to talk to an accountant ahead of time, because they're afraid, hey, they're going to blow the deal. They're going to bore them to death with tax stuff. But our approach, and we found successful, is that we really explain, like I did earlier, that, hey, it's not as bad as you may have heard. It's not there's a very good chance you may not owe tax, especially as a short-term renter. And as a long-term rental, this might be a better option for you, just because as Gregg, and that's really, I like the approach Gregg, his company uses. It seems phenomenal. So
I love what you said there about the realtor potentially blowing the deal. I mean, we love our realtors, and certainly I can commiserate. When I speak with the clients for first-time investors, I'm also thinking in my head, wow, there's so many steps and hurdles that they're just going to hang up on me. But really what the purpose of this whole endeavor and this whole enterprise is a successful investment, right? So best to have those upfront conversations,
yes.
With the investors, to set their expectations, get them familiar with the process, so that when they come to it, they are sensible, they are the right partners for us. And again, they are long-term partners, repeat partners. That's essentially what we're looking for with our clients, and with the whole host of partners that we work with as well. So how this comes to play in my world is, you touched upon it a little bit, Gregg, as well, is we tell the investors that working with us is essentially getting another level of due diligence. Because us as an investor, we wouldn't put our money in an investment that we didn't think would yield a good return and make sense, both in terms of the quality of the property, but also the structure, how much are you leveraged. There's so many aspects to a transaction and a deal that could derail it, or could potentially not be as profitable. And having an extra set of eyes, be that yourselves, Gregg, because you see the full picture, the tenant, the management, the property itself. So, and of course you, Steve, you know the potential implications of not having the right structure, or having a tax bill that's a lot higher. Having those professionals that are following with you throughout the process, it might, initially create a few more steps for you. So you can't just take your cash and buy the first thing off of Zillow that you see. But in essence, what you're trying to build here is a portfolio and a property that will yield the right return. That is going to be the right approach, having the right professionals. And just to elaborate a little bit, part of our process as a lender is we send out an appraiser. We look again at the property from a different perspective. We want to make sure that the value is that you're paying is reflected in the appraisal report, that the market rent analysis is realistic, so that when you are told potentially by your broker or your realtor that it can yield, 20%, whereas the appraisal report comes back with a more realistic figure, you will go ahead with the deal if it makes sense, and you can rest assured that you've had all those elements and all those data points reviewed and assessed by your lender, which should give you more comfort. I actually had a conversation recently with an investor who we sent out their appraiser as part of the due diligence, and they were really delighted because the appraiser came back with the value that he thought it was worth, the rent analysis that he's even higher than he thought it was worth. And he said to me, wow, this really confirms that this is a good deal, and I'm confident because this was his first transaction. So really, really important to have your professionals help you both initially and throughout the journey. We're running out of time. We've got a few more minutes, but I did want to very briefly, if you can say it in a few, a minute or two each. Markets, of course, there's a lot going on. We touched upon it briefly in the beginning. What I would like to focus on today, to hear from you guys, is how are the recent developments and the uncertainty and perhaps some of the risks that come with that, how are you seeing it affect newbie investors versus seasoned investors? What can we glean from that? Specifically, Gregg, of course, you're with the real estate and active in that market. Do you have any insights to share on that regard specifically?
Absolutely. The idea of coming to the U.S. to invest in real estate is still extremely strong, but the ways that foreign nationals are investing in U.S. real estate is actually very different since 2020. Since 2020, typically you have your gateway markets, New York, LA, Miami, those types of markets where typically foreign nationals have flocked. It used to be about 50% of foreign national investment dollars in real estate had gone to those markets. But that number has dropped significantly. It's now about 27%, according to a recent study by Deloitte. And where is that money moving? it's going to secondary and tertiary markets. Those markets now where prices are lower, they're not as high as New York or some of these other major markets, and significant population growth has happened. So you have significant rental demand. And of course, Jacksonville is one of those markets that we've seen significant population growth. So it's very interesting where the money is moving, and markets that typically were not on the map for foreign nationals to invest in now represent a huge opportunity for folks to be able to take advantage of the stability of the asset class, but also outsized growth, which is really great long-term for the investor.
Fantastic. Thank you for that, Greg. And Steve, any changes that you're seeing in the current markets at all? What are the trends that you're noticing? Newbie, existing investors, anything to share?
Yeah, I mean, we've seen, I think the biggest shift we've seen, of course, has been the UK. A lot had sold because of market factors. A lot of them, and at least in our area, had bought during some high times, and because of exchange rates, it was a great time. Because of the pandemic, a lot of them decided to sell. But then we're seeing a lot still Canadians, Canada really strong still, and as well as South America. There's a lot of South Americans looking to buy here in the U.S. As far as the change, I haven't seen a lot of change when it comes to newbie investors versus current ones, except the current ones, depending on where they're at. Yeah, a lot of them spent a lot of their money the last couple of years when the market was really, really booming, and they felt like they got good deals, and they kind of, it's more, we're seeing a lot of new investors and not some of the same ones. A lot of them that kind of spent their money and gone that way, but it's more, a lot of it's newer investors looking to find ways. And a lot of those are people that had business here anyways, but they're looking to invest now in real estate.
Thank you for that, Steve. That's really interesting. And I wanted to, before we let you all go, just to touch upon a few questions that came. Let me ask you, Greg, the properties that you mentioned, I mean, you talked about a little bit, the structure that you work. Just wanted to confirm, the properties would be 100% owned by the investor. There is no JV at the point of sale once you've sold the property. Is that correct?
That's 100% correct.
Correct. Excellent. Now, from one of the Canadian attendants, they wanted to ask, in terms of the tax perspective. So, Steve, this is for you. She's asking, what can you share a little bit? Of course, each person's individual and shouldn't be taken as a consultation, but to avoid double taxation, what's your high-level advice for Canadians?
Well, Canadians are a little bit different than some other countries because of the way Canada's looking at an LLC, for example. Canada looks at an LLC as a corporation. They don't consider it a pass-through entity like we do here. For example, the UK would look at it. They're looking at it as but the thing about, so there's a possibility of double taxation for the Canadian with an LLC. It's not guaranteed, but generally speaking, because of the tax treaties, there's not double taxation. For example, if you own it in your personal name, you're not going to be double taxed. You have, or some other structures, you're not going to be double taxed because of the tax treaties between the U.S. and Canada. You pay what you owe here first, and then you would get a credit on your Canadian tax return. And I think you mentioned it, Hanah, earlier at the very beginning. Sometimes there's some deductions that are allowed here in the U.S. that are not allowed in other places. But generally speaking, you're not going to be double taxed as a Canadian.
Sounds good. Thanks. Yep. Thanks for clarifying that, Steve. And of course, anyone who wants to talk about this further, Canadian market, very briefly, we'll put the contact details, and also that should be included in the flyer and promotion for this webinar. You can reach out to Steve and his team, and he'll go into further detail. Just one last question, Greg, this is a bit for you and for myself. We've been asked about Florida. Of course, it's great because it's not affected by economic market changes because of everything we discussed in terms of the COVID policy and just the huge migration to the state. This attendee would like to know the price range of the properties and how much of a down payment they would need to bring to the table. So I can answer the last part first, but then I'll pass it over to you, Greg. Typically with us, lending any transaction you purchase, there would be 30% down payment. And of course, the closing costs need to be considered in terms of what you bring from home. But typically we go up to 70% loan to cost or loan to value. For a refi, we will go up to 60% of loan to value. So that should hopefully answer the last part. And Gregg, if you don't mind, what can you give insights in terms of price ranges, both in your market and in general, if you have that info?
Yeah, absolutely. Well, in Jacksonville, the median home price is about $350,000, and we're going to be focusing on workforce housing, which is housing that comes in below the median. And so you should expect your purchase prices to be somewhere between about $180,000 to about $280,000. So if we combine both of our answers there, Hanah, I would expect using Lendai's products, probably somewhere around maybe $60,000 on the very low end to maybe about $90,000 for a down payment plus reserves. Do you think that'd be accurate, Hanah?
Yeah, I mean, we like to stay a sweet spot of around 45%, just because, again, not all of it is what you need to actually physically pay, because we've got that reserves you mentioned, but it's 30% down payment, 5% closing costs, depends on the market as well. And then we like to see about 10 to 12 months of reserves of your expenses. So property, taxes, insurance, and mortgage, etc., just so that you're not completely leveraged and not able to meet any unexpected expenses that may occur, and sometimes does happen. So that's a good sort of range to have in mind when you're looking at investment property. Of course, refi is a very different story, and especially if you own a property outright cash, you can pull that money and buy a new property without bringing any money from home. Use the equity you extract from your existing investment to put towards a down payment for the next one. So keeping that in mind. Now, thank you so much for everybody. We've gone just over the 1 hour mark that I set for us. I hope you'll forgive me. I just wanted to thank everyone for joining and let you guys know that an email will be sent along with the recording with all our contact info, so you can reach out to us, be it myself for the financing, or Steve for accounting and tax, and Gregg for the wonderful market of Jacksonville, and to speak with his incredible team that I work very closely with. So I highly recommend you reach out to them. And I just wanted to let you guys know, we've talked a lot about short-term rentals today, and we are having a dedicated webinar that will discuss short-term rentals on the 8th of March at 12 p.m. Eastern. And the title will be The Insider's Guide to Short-Term Rentals, Maximizing Your Profits. So don't miss that one, because there's going to be some very good insights shared there, and give you an opportunity to ask all the questions that you have. I know we touched upon quite a few today. So don't be sure to sign up for that, share it with everybody, and we'll see you then. And thank you, Gregg. Thank you, Steve. You guys have been awesome. Thank you also for your continued partnership and for helping our clients. This is a good opportunity for me to shout out how great you all are. And I'm looking forward to working with you in the future and helping all of our audience and network and anyone who will be watching this recording. Whenever they're ready to have a conversation, they know how to reach us. So thank you, guys. Thank you, everyone, for joining. I hope you have a great rest of your day and a great weekend.
Thank you, Hanah. Thank you, Steve.
Thank
you, everybody.
Thank you, Gregg.
Thank you.
Thank you so much.